I have 30 years investment experience, 25 years of those have been managing Japanese equities. I joined CCM in 2011 with an explicit purpose to develop a strategy that is now CC Japan Income and Growth. I am the manager of the trust, and with my colleagues we are also analysts on the individual companies. So we meet companies regularly here in London, but also each travel independently to Japan to conduct this research. We're looking to generate a total return, and a very important component of that is the income generated by the holdings within the trust. Our goal is to beat the TOPIX Total Return Index and provide an attractive income for investors who are looking to draw that from the fund. The trust was launched in December 2015, and we've been able to generate a dividend that has increased each and every year, and that dividend has been generated from the underlying income received from the holdings within the trust. We feel we have a strategy that's developed very much for the market as it is now, focused very much on the corporate governance reforms that have been driving the improved returns from companies in Japan now since the beginning of the Abenomics project, the former Prime Minister, from around about 2013. We realise that a lot of people are fearful of investing in Japan because of the demographics, the falling population. But we feel there are some very, very exciting opportunities to invest in companies listed in Japan. Many companies are already global, have established themselves as international leaders, and they create significant opportunity. We also invest in companies that are regional winners, so companies that are benefiting from the growing consumer base and increasingly wealthy consumer base in and around the Asian region. And finally, we do invest in domestic focused companies. Despite the challenges of a falling population, there are areas of new technologies, for example, where there are significant growth opportunities for individual companies. We're the only trust in the sector that pays a dividend from the income generated by the underlying holdings. We see income as a very important component of total return, and we target companies that are able to grow first and foremost, but are able to reinvest from their cash flow to generate an income to complement that growth. We look for high quality companies with distinct growth opportunities. Those might be global, they might be regional, they might be domestic, but the growth is a very, very important component. We look for companies with very, very strong financial base, strong balance sheet, good consistent cash flow, and we're looking for companies with very, very strong management. Yeah, having identified the companies with the characteristics that we feel are key, valuation then becomes very, very important. We don't want to buy cheap stocks for the sake of being cheap. They run the risk of becoming value traps. We also don't want to buy stocks that are highly valued at valuations that can't be justified. So we focus very much on valuation, looking for companies that have valuations that are comparable, if not better, to the international peer group. It's certainly an exciting time to be looking at stocks in Japan. The reforms that we've spoken about are driving significant change in companies across a broad range of sectors, both large cap companies and small cap companies, and we see the benefit of that in terms of an increasing investment universe, increasing source of ideas.